This conference will now be recorded.
Good afternoon, everybody. Welcome to our Moving Markets podcast. My name is Jeffrey Dunyan. I am here with Kevin Hurley. Glad to have you on board, Kevin. Got a little bit to talk. This might not be a real long podcast. We got a little bit to talk about, but all the excitement is going to come in a couple of days when the Fed announces what they're going to do with rate hikes. We're going to talk about that in just a second. Introduce yourself, Kevin. Let's get rolling here.
Hey, welcome to be here. Kevin Hurley with Hurley Investments. Jeffrey, let's just get started.
Okay, so more than any, well, let's give a quick recap. Let me change our screen here. I'm going to give a quick recap on just what happened in the markets today. Right out of the gate today, the two of the three indexes, the Dow and the S&P, took off to the upside right out of the gate this morning. I mostly stayed. I think the S&P might have dipped red a couple of times. Mostly stayed in positive territory. The Nasdaq started out in negative territory and then rallied pretty strong during the day to finish up, over a third of a percent. It's funny how it made me think, just as I was saying that out loud, 15, 20 years ago, any one of the three indexes moving a third of a percent or a half a percent in a single day was considered kind of a big 1 day move. Now it seems like nothing. A third to a half to even 1% move in either direction just doesn't seem like that much. I'm looking at the S&P up 34.9 points today, 9/10 of a percent. It doesn't seem like a crazy wild move for the S&P. The Dow up 382, a percent, almost a percent and a quarter. Doesn't seem like a crazy, wild, massive move because we get these days occasionally that are 2.5 to 3%, and double the movement of what we got today. But a lot of this buying today, from my perspective, is kind of summarized in this headline up at the top on this bar here on the CNBC website. Stocks close higher on Monday as investors' banking crisis fears ease. I don't know why the fears are easing, except that, well, actually, I do know why the fears are easing. I think it's kind of foolish, but I'm going to let you comment on that, Kevin. I'll come back around and comment on that. But why do you think people's fears are easing over this bank stuff?
Well, I'm just going to tell you, I don't think it's that. I mean, the banks are in trouble if they haven't been managed correctly. I think, in all reality, that because there's hope that the Federal Open Market Committee will raise a quarter point and then pause for a while to let the banks save themselves somehow, which makes zero sense to me. Some people were buying in on that. But in all honesty, I talked about it last week. There's nothing that a quarter point's going to do that will really hurt the banks. And with all due respect, there's there's nothing that by waiting or pausing on interest rate hikes is going to help the banks, because this was the decisions that were made last year are what's affecting them right now. You have any similar thoughts, or do you disagree with me?
No, so let me back up a little bit, and then I want to comment on what you said. I just wanted to point out really quickly while I'm thinking about it. First Republic tanked today. I think it was down almost 50% and over 50% a couple different times during the day. So here you've got First Republic, the next decent sized regional bank that is collapsing. JP Morgan trying to bail them out. In spite of that, they collapsed. And yet they're sending us a headline that fears are easing. I don't think fears are easing when First Republic is selling off half its share value in a day. How do you reconcile those two headlines if you're CNBC?
Right. Or can I mention this one? How about US Bancorp bailed out Credit Suisse again? Another bailout for Credit Suisse. Yet somehow fears are easing because a bigger bank is gobbling up the smaller ones. So that in my mind they're gonna have more monopoly. I mean, wow,
Yeah,
I'm okay with that, I guess, because
yeah.
that's what's published today.
I just I
Makes no
just
sense.
can't
It's insane.
I just can't reconcile these two headlines. It's like you've got, and I know this is the way it works, at least to a degree. I'm not going to pretend that I know exactly how CNBC or Fox Business News or Bloomberg or anybody else runs their website, but you've got somebody there typing up a little article and throwing this headline up, and somebody else throwing this breaking news bar up here, and these people are not communicating with each other. They're absolutely not having conversations with each other, because to me those two things are in complete contradiction with each other. Anyway, I just
Hey,
wanted to point that out.
they're
Go ahead.
covering both their bases. The market's going up or down. We told you
Yeah.
guys it was doing one of those.
Yeah, exactly. Let me circle back around to what you were saying about Powell, and I agree with you. I don't disagree that a lot of what these banks are facing started with the largest rate of interest rate increases that we've ever had in the country. The 75 basis point rate hikes, what, 4, 5, 6 times in a row last year, and then they went to 51 time, and then they went to 25 basis point one time. Those are the
But Jeffrey,
fastest.
that
Go ahead.
helps the banks. That
Okay.
widens the spread. They make more money. What's hurting them is their poor portfolio management. In fact, I think a bunch of those banks, some of those licensed broker dealers, because you little safe option strategies education, baby.
It helps the banks. Like I agree wholeheartedly. It helps the banks if the people that are there at the banks and the people that are at the San Francisco Fed looking over these banks are not completely asleep at the wheel. Um, I look at this thing that went on with SVB and this thing that's going on with First Republic right now. And the more commentary I hear from different experts, the more people talk about this, the more I'm becoming convinced that two things happened, that led to this, much more so than what the Fed did. Because a lot of people want to blame the Fed. A lot of people want to blame these rising interest rate hikes and how they've killed the long-term stable bonds, and that's gone upside down and caused these people to collapse. But I personally am more in the camp of the people that are saying, number one, the portfolio managers at these banks got away with so much for so long on low to zero interest rates, got in bed with so many Silicon Valley companies and with so many of the regulators, that they lulled the people who should have been the adults in the room were lulled to sleep, and literally they were literally asleep at the wheel when the time came to rein some things in. Kevin, what would you do if your kid was in a wreck, and your kid was in a wreck because they were texting on their phone, and the car wasn't functioning improperly, may have not been going too fast, may not have gone horribly outside of out of its lane, but the cause of a crash that one of your teenage kids was in was because they were texting on their phone. You'd be pretty upset with your kid, right?
Oh, I'd be extremely upset. In fact, I'd fire him. He wouldn't see a license in forever.
If someone got hurt, your kid would be on the hook. They would be liable. There'd be some major fallout from something like that, depending on the severity of the crash, right?
Yep.
When you've got this lady at the San Francisco Fed who has been spending all her time pushing climate change stuff, something that a bank should have nothing to do with at all, other than they could, I suppose, choose to invest in companies or not invest in companies. But you're talking about they want to force banks to invest in more of this climate change crap. She's focused on LGBTQ things. She's focused on woke policies. She was the one texting on her phone with all these distracting things when the car crashed. I'm the more I hear about what was actually going on. Yeah, do you have other people that made some bad decisions? Sure, you did, but she's the one that was texting on her damn phone when the car slammed into somebody else. And that's what bothers me most about this. The people that want to blame it on the Fed raising rates are looking to divert the blame from the person who should have been the adult in the room. It should, in fact, let me change. I want to change my analogy a little bit. Can I change my analogy a little bit?
Please do. Go for it.
She was the driver's ed teacher in the passenger seat texting on her phone when she should have been watching the teenager that was driving the car. That I feel is a slide. I had to change my analogy to make it a little bit better. The people at the people running the portfolio at the bank, they're the ones that actually crashed the car. They did the stupid things. They allocated that portfolio in a horrible way. She's the driver's ed teacher sitting in the passenger seat that did nothing to stop it because she was texting on her freaking phone.
So you know what I don't understand, Jeffrey?
A lot of
I'm a
things,
registered
mostly women.
investment advisor. I manage tens of millions of dollars in the stock market. My regulation is, I don't want to call it unbearable, but it is absolutely ridiculous. The amount of copycatty reporting I've got to do, it just, again, it makes no sense why I'm doing all this. I'm sending them 3 different reports sometimes, written 2 different or 3 different ways. Sometimes it's 2 different ways. Same report written 2 different, the same way, going to different organizations that could talk to the other one, that could regulate me. It just, I don't understand why the regulation is so much on the small little guys, yet the big guys, obviously they can pay their way out of it, but they're not regulated nearly with the fine tooth comb that I am. And they're the ones, in my opinion, that cause the big damage to the economy. It's just not right.
It's not, and it's sad that someone like you who's doing really well for his clients, who's complying to all this stuff, you can't take the San Francisco Fed gov or regulator, whatever her actual title was. You can't take her and a half a dozen of her cronies, on a private jet to an island somewhere, schmooze them, virtue signal with all your talk about climate change and what a green company Hurley Investment is, and how you're never going to hire anyone ever again who's not transgender and dresses in drag, and you don't do all the virtue signaling and go and schmooze them the way you do, so they regulate the hell out of you, and they just turn a blind eye to the companies who are doing those things, who are virtue signaling and who are schmoozing them. And it's a form, I know it's hard to prove it this way, but it's a form of bribes and payoffs is what it is. And it's a crappy system. And the system exposed itself this last few weeks. The system imploded because it's a crappy system and because it's unfairly, the regulations are unfairly enforced. They're disproportionately forced, and they're paying the price. The thing that ticks me off as much or more than the way the rules get enforced or not enforced is that ultimately it's people like you and me that ultimately pay the price. You get hit with a double whammy. You pay the price in having to abide by these regulations, and it's a pain in the butt for you, and it makes a lot of what you're doing more difficult and takes more time and costs you more money. And then both you and I are getting hit with the fact that ultimately we'll pay more bank fees. We'll get, less returns on some of our stuff that we try and put with traditional banks. Um, it's we pay for it. You and I, the average guy, the little guy is who's out there ultimately paying for it. And it, these fat cats in Silicon Valley, these board of directors for this bank, these Fed regulators, you think this lady who was supposed to be regulating it, do you think she'll lose her job over this?
She'll probably get a raise.
She'll probably get a cabinet position. She'll probably be what's her name that's been there's that one Fed gov who's I'm really terrified of because she's so over the top politically correct and woke. Her name keeps getting brought up as a possible replacement for Jerome Powell if he steps down, if he gets fired, if his term comes up and they don't, give him an extension or whatever. Lieb or something like that. You remember the name of the lady I'm talking
Yeah,
about?
I was going to make a joke and say Janet Yellen, but we've already dealt with her.
So here's what I think is going to happen. This Lieb lady will probably slide into Janet Yellen's place when she um when her barber retires and she can't get that haircut anymore and feels like her career is over. Um then I think this Lieb lady will replace her, and I think this clown at the San Francisco Fed that should have been regulating the banks is probably who slides into the Fed chair role. You're right. She will get promoted because she checks certain boxes on her sexuality and her virtue signaling, her opinion on climate change, her she checks off some boxes that they feel so much of a need to have there, that you're right, she probably will get promoted. I mean, she literally, go back to the analogy I made. If your kid, while taking driver's ed, crashed a car, did thousands of dollars in damage, it was proven beyond a doubt that the driver's ed teacher sitting in the passenger seat, who had a brake pedal on her side of the car and could have hit it, was instead text messaging her girlfriend. It would be like making them the new head of the DMV in your state.
Tell me how
It's
messed
what's going to
up our
happen.
government is right now.
It's what's going to happen. So anyway, let's shift gears. Let's shift gears and talk about.
Well,
And
actually,
this.
let me just say one more
Go
thing
ahead.
on this, Jeffrey. There will be more government regulation, in my opinion, that's going to come down the pipeline that inevitably will make the cost of doing business for us more expensive. That is busy work or paperwork that, even in concept, truly won't prevent something like this happening again. And it's going to cost the taxpayers not only billions of dollars, but the representatives are supposed to be representing us up at Capitol Hill are going to be messing around with this crap instead of something that could be, I'm going to say, more helpful for our country in general. It's just, I can't believe the stupidity of what we're dealing with here and what a problem it's going to bring coming forward from here on out. It's asinine. I already see
You're
it.
looking.
I received today an email on how I'm supposed to be doing and creating a new part of my disclosure book on what I'm going to do if um, people's identities are compromised. And it's like, well, let's think about it. I mean, I've got a firewall through the SEC. I got a firewall through my own computer. I got a firewall through my router. It's like, how about I've already taken the precautions that will prevent this from happening, so I don't ever have to create another 12 pages to describe what we're going to do if people's identity are compromised and stuff gets out. It's like, it's just ridiculous. It's spend the
You're
$450 for your firewall so that you don't ever have that happen. Never think to do that. It's just, let's do more busy work and just make things more expensive. It's asinine. So asinine.
you're gonna end up with Dodd-Frank 2.0. You're gonna get another piece of massive regulation that in an attempt to do something, it ultimately does the wrong thing. And it, yeah, and even with stuff like that, it's the little guys that ultimately end up paying the price. I mean, that's just plain and simply what happens. So yeah, I agree with you. It's overregulation is on its way as a result of all this. So let's shift gears a little bit. Let's talk about the Fed meeting. I was telling you this earlier today, and we didn't even have a chance to talk much about it. So I don't know if you agree, disagree, if you have some different thoughts than I do. I think Jerome Powell on Wednesday and the Fed is in a no-win position, and here's why I think this. Um, I do think a 50 basis point hike is off the table. I think in light of what happened, 50 basis points is probably not going to happen. As before this bank collapse, over half the people that bet on what the next rate hike is going to be, the probability of 50 basis point or more was over 50%. It was more than half the people that weigh in on that. It went way down really, really fast. And now I think it's pretty split between no rate increase at all or a 25 basis point rate increase. Here's why I think Jerome Powell's in a no-win situation. If he goes 25 basis points, people are going to be pissed off. They're going to say he's causing more of a problem. He's pushing us more towards recession. It's going to be a bad thing for banks. They're going to be worried about more banks failing. I think you're going to see a sell-off in the market. If he goes 0 rate increase, I think you're going to have people that will willingly jump on the bandwagon of interpreting that as this bank thing is worse than we thought. No way he would have gone to 0 rate hike, because 0 rate hike starts to give the appearance of what Volcker did back in the late 70s and early 80s. Volcker raised rates, then he backed off a little bit, then he reversed and lowered rates, then he had to raise rates again, because every time Volcker took his foot off the gas, inflation edged a little bit higher. Ultimately, it got up to 14, 15%. We had double-digit inflation back in the late 70s, early 80s. Powell has been committed to not repeating the mistakes that Paul Volcker made back in the late 70s and early 80s. So he's been, I've praised him a little bit. Even though I'm not a big fan of Powell, I have been praising him over these last 5 or 6 months, saying he's been consistent with his message and he's followed through, and he is doing what has to be done to get rates, to get interest rates, to get inflation rates under control. It looks like it's starting to have an effect, because even though rates are still going up, or even though inflation is still going up, it's not going up as fast. And that is, you have to admit, that's a good sign. So I see this really, really tough situation that he's in. And I got to be honest with you. I don't think Powell, I'm not sure if he has what it takes to thread the needle this time around. He's been, to his credit, for the last 4 or 5 months, both in his decisions and in his commentary, he's been able to thread the needle and keep people at least appeased, if not happy. I don't know how he does it this time. I think he is in an incredibly, incredibly tough situation. And I don't know if he's up to the task. I don't know if he can do the right thing and then say the right thing to keep people's minds at ease.
But it's not his job to save the banks that were poorly run, that are primarily regionals. His job is inflation and employment. And to be honest with you, he sucked at both of them the last 2 years. And I agree with you. Although I heard the most ridiculous thing on CNBC today, that he's going to do no rate hikes and they're going to give a pause. They're going to give a pause to see if their inflation has been taken care of with the rate hikes they've already had. It just, to me, again, it just seems asinine. It's like, our inflation's not coming down. We went over those numbers last week. Our inflation still looks bad. 7.5%, 6.5%, 13% over 2 years. I'm still paying a lot for gas, eggs, milk. I just, why the hell can't he just do his job? Inflation, employment. That's his job. That's what the rate hikes are set for.
Okay.
Let the chips fall for those people that had these banks that were really a crypto bank, a Silicon Valley VC bank. I mean, I don't know. If I would like to see someone just do their freaking job. That's what I'd like to see.
Okay, Kevin, you're ticking me off a little bit, because you're forcing me. I hate doing this, but you are forcing me to defend Jerome Powell, and I can't stand the idea that I'm about to do that. I'm going to defend him
Then
a little
don't do
bit.
it.
I'm gonna defend him a little bit. I think for all of 2021, Powell was asleep at the wheel. I think he missed the boat completely. Every time he said transitory inflation, I felt like off camera there was a government employee that literally was pointing a gun at him saying, this is this is the administration's line. This is what you have to say. And if you don't, you're toast. I think he was political in 2021. I'm going to defend him a little bit and say that throughout 2022, he has been trying to fulfill that mandate. The higher interest rates are supposed to drive employment down a little bit, which is supposed to help with the easing of inflation. When you don't have as
Right.
many people taking home a big paycheck, then demand goes down and supply has the ability to catch up. Interest rates go higher, supply has a chance to catch up because demand goes down. So I think he's been trying to do that. And that's why I'm only defending him in the sense that for the last 6+ months, he has stayed on message and he has followed through and done what he has said he's going to do. Now, I don't know how much that makes up for how screwed up he was in 2021. I'm of the belief that if in
Okay, but hold
2021,
on.
the very
If he
first
doesn't
time.
raise interest rates or only does it a quarter point and stops, how is that staying on track or staying on message?
I agree. Oh, I'm not disagreeing with you. That this is, but you're actually making my case. We don't know what he's going to do yet. I agree with you that if he does not raise rates on Wednesday and pauses, he has screwed up. I agree with that wholeheartedly. That is a massive screw up on his part, and I'll be right there in the same camp with you. What I'm saying is, I think he's in a no-win situation because if he follows through and does what I think he should do, and that is raise rates, I think the market is going to interpret that very poorly. And I think today's rally is the building in of one more time that people are trying to read his mind and making the assumption that he's not going to raise rates. But then if he doesn't raise rates, I agree with you, that's the wrong thing to do. But even though the market should react good to that, I think people are going to look at that and say that the bank crisis is worse than we thought. That's the only justification for him not raising rates this time. And I think either one of those moves, I think, has the probability of giving you a sell-off before the week is over.
I think we're selling off on Wednesday, Thursday, Friday. Like there's no tomorrow to make up for all this foolish hopium jump in our market. How would I say
Well,
this?
that's where
The
we're in 100% agreement. And I think tomorrow's going to be weird. Tomorrow, I think is going to be weird. I think today's rally is all you're going to get on the hopes that there's not a rate increase. I think tomorrow is more likely to see a lot of back and forth. I think tomorrow what you'll probably see is you'll see the Dow and the S&P be up at times. I think they'll be down at times. And then tomorrow at the
finishes
close of the
flat,
day, I
finishes
expect to
flat,
be
and we
somewhat flat at the end of the day tomorrow.
don't move till the rate hike announcement on Wednesday.
And then I think you're going to get sell off whether there's a rate hike or not. I think you're going to get a sell off either way
I don't know.
because I
With
just think,
all due respect, quarter point and a pause, and I think you see the market go up significantly. Maybe not in
okay,
one day, but the next week, watch a 5% increase on the S&P 500 with a rate pause because it's confirming that at least for 30 days, actually out till May, for 60 days, we have certainty, no rate hikes.
okay, I'm not going to disagree with you. I think if he raises rates 25 basis points on Wednesday and then says definitively that they will pause and not raise rates on the next meeting, then I agree with you wholeheartedly. I have a hard time believing he'll say that, and here's my reasoning behind it. It blows up the narrative that he has stayed with about data-driven decision making. I don't think he
Yep.
wants to telegraph that he's not going to raise rates the next time, because what if here's the reason I think he cannot afford to do that. If he says we are going to pause next time, what happens if the March CPI and PPI numbers that we're a couple of weeks, 2.5, 3 weeks from those being reported. What happens if those numbers come in respectively 7.9, 6.9? What happens if he says we are definitely going to pause now and not raise rates next time, and then you get blowout to the direction we don't want? You get blowout unexpected high CPI and PPI numbers, because I think these last set of numbers, man, they don't make sense to me. I'm still having a hard time wrapping my mind around the last set of numbers. I think they're going to be revised up, and I think the next set of numbers are going to come in with inflation hotter than expected. And if that happens, and he's already said no more rate hikes, man, he's once again, he will have painted himself into a very, very tough corner to get out of.
So, Jeffrey, you forget about, just like the politicians have the get out of jail card, the Fed chairs have the oops card. Oops.
Well,
We missed it again.
but
Oops,
okay.
we couldn't read the economic tea leaves any better than anyone else. I mean, it's just
Well,
asinine.
well, I guess we'll see if the
In
market
fact,
is as forgiving towards that.
let me go on the record saying what really needs to happen is a quarter point hike in March, a quarter point in May, a quarter point in June, a quarter point in July. And then he can say, you know what? We're done. We're done. We're going to pause for the rest of the year. We'll look at it January 2024, and we'll make a decision at that time if we
I
need
was
to
with
keep
you right
raising
up until
interest
you
rates.
I was with you right up until you said then he pauses for the rest of the year. I still think I'm not ready to be committed to him pausing for the rest of the year. But I like what you said up until that. And I mean, you might be right. It's too far out, but I just think this Wednesday is arguably the toughest spot he's been in for the last year and a half, because I think whatever I'm look, next Monday when we're doing our podcast, I'm going to give you some major kudos. If he does the 25 basis point hike and he says definitively, even though you and I both know he could change his mind, if he says definitively, we will pause now and wait a cycle without raising rates. Even if he says that, which I don't think he will, I'll give you all the kudos and all the props in the world. Um, and that's the only thing I see saving this next week to week and a half from being very bearish in the markets.
Yeah, there's no way he's saying that. In fact, the only reason why I wouldn't stop in July is because there's not a press conference, which means he'd have to stop in September, which means we could have a really good Christmas rally, October, November, December. But yeah, he can't stop.
I agree.
He can't.
I think he's scared too. He's scared of a repeat of what Volcker faced, and I think that's part of what's got him in such a difficult situation. All right, we have pretty much exhausted our time for today. Fun conversation. I can't wait to see what happens on Wednesday, and then for sure next Monday we will be talking about it. Any final comments, Kevin? I'm ready to wrap up right there.
Any final comments? Again, I'm hedged. I'm hedged to the downside in portfolios I'm managing. I'm not hedged in gold or silver. I'm hedged in lead for bullets when everything falls apart. But I mean, it would be foolish to not be hedging your portfolio with the uncertainty that our market sees right now.
Agreed. I got to be really quick about this. We almost forgot one of the most important things to talk about today, which we did not talk about. Kevin and I are the only two people in our March Madness challenge. Kevin and I are the only two left that have all four of our Final Four teams still in the tournament. Now, we have different Final Four teams, so one of us is going to come out on top, one of us is not, but we are the only two left in our respective two small companies that have that have all four of our teams for our Final Four picks still in the tournament. So after next weekend, maybe we'll start the podcast next week with giving an update on which of us got more of our Final Four correct. Going to be fun.
That would be good.
And we
I think
both
it's going
still
to be
have
me.
our
I've
teams
been leading this
alive.
whole
That
time till yesterday.
Obviously, if we still have our teams alive for the Final Four, we still have our teams alive for the championship. But we have different teams playing against each other in the championship too. So, one for bragging rights for an entire year, and probably a steak dinner is on the line as well. Either Kevin or I, one of the two of us, probably going to emerge on top, and our employees are going to just we're going to. One of us is going to get to hammer our employees relentlessly for a full year on doing so poorly in the bracket challenge.
Let's go, Hurley.
All right. Thanks, Kevin. Have a great rest of your day.
Sam, to you. Have a good one. Thank you.
Goodbye.